Let's turn to you for the trade on Chipotle. This is an $83 billion company.
Wow.
You just think about how big that is.
Yeah, no, and they just can't be as quick as these smaller, like Sweetgreen. But all eyes are going to be on same-store sales here. If you got to look at one number, look at that. Anything over 6.5%, that's going to be met with pure joy, as we say on Wall Street. It's a high hurdle, but they've been able to deliver, even with the departure of the CEO, who was seen as real strong. The team is deep. The guy's coming in has been there a long time. I'm a value guy, so 55 times earnings is a little rich for me.
Wow.
But I'd urge my growth-oriented friends to take a look at that same-store sales number.
Of course, the same-store sales for this current quarter won't show up for a couple months now because of the brisket promotion and everything else. But anyway, don't miss Chipotle's interim CEO, as Kate mentioned, Scott Boatwright, who's going to be live on Closing Bell Overtime today to discuss the company's earnings report. That's in the 4 p.m. Eastern Time hour. We'll see the state of brisket and everything else on the menu.
I've been going there more than ever, for what it's worth.
I've gone a lot more over the last year than I have ever.
Oh,
so
I'm taking the over.
Have you done the brisket?
No, I didn't even know about the brisket.
Oh, the brisket is something special.
Even better. Right.
Let's move along to Pfizer, the pharma giant blowing away estimates for third quarter revenue, helped in part by sales of its COVID vaccine and antiviral pill Paxlovid. Angelica Peebles is here with those details, and the stock is lower, Angelica.
That's right, Kelly. This looks like it was a great quarter and a great print for Pfizer, but the problem is this strength is all coming from its COVID portfolio. Like you said, its antiviral Paxlovid really beat the estimates here, up by about $2 billion past what the street was looking for. And also its COVID vaccine came in about $400 million ahead. And so the problem for Pfizer is that they're trying to get people to look at everything else in its portfolio and move beyond COVID. But that is the story today. And if you look at its cancer portfolio, some of the drugs there, including some of the ones that it got from its acquisition of Seagen, drugs like Padcev, actually coming in a little bit short of estimates. So that's not helping their case that there is more to see beyond COVID. They did also talk, though, a little bit about its obesity pipeline. Remember, they've had a few setbacks there, but they do still have an experimental pill called danuglipron. They're expecting an update from that drug in the first quarter of next year. And they also talked about 2 other earlier stage pills in the pipeline. But again, this is all really early. And right now, investors are looking for what else they can grab onto. And remember, Pfizer is facing pressure from activist investor Starboard. And CEO Albert Bourla today directly addressing some of that pressure from Starboard, saying that they're about 15 months too late and that Pfizer's already taken numerous actions to right the ship here, things like cost cutting and executive changes. But again, it doesn't seem like there's a whole lot of enthusiasm for that pitch. The stock today down about 2%. And JP Morgan analysts this morning saying that it's going to take more to really change the narrative here. They need more progress on the pipeline and also some stronger launches in its current portfolio. So again, more to see here, and we're going to have to see how this plays out between Starboard and Pfizer going forward, guys.
Angelica, thanks. And Chris, I think Bourla would have a stronger case if the stock was reacting strongly to this earnings report and kind of backing up what he has to say. But after Smith's presentation and hearing the analyst echo that, you think there's probably going to have to be more done to show that they have their arms around this thing.
I do, but I think Pfizer's like the Rodney Dangerfield of pharma. They get no respect. The whack on them last year was, the COVID's falling off a cliff. Now they got great COVID sales, and it's just COVID. And but it's a very cheap stock with great cash flow. So I like that. What's the catalyst? I don't know. But if we knew what the catalyst is, it wouldn't be selling for 9 times earnings with a 6% yield. Absolutely. So I'm happy to take the 6% and wait.
You're not worried about that 6%?
No, I'm not worried at all about that 6% because the cash flow is quite good, easily covers the dividend. And earnings are growing. They're not growing fast, but they are growing. And this COVID business, look, it's lumpy, but it's, the check still clears. I mean, it's still money. So it's not a bad business. And, we're one pandemic away from Pfizer stepping into the breach again. Who knows? Mm-hmm. And so there's lots of ways to win here, including new discoveries, including buybacks, including increased dividends. So this is a name I like. I would use this weakness as an opportunity.
All right. And the CEO, Albert Bourla, will be on Mad Money with Jim Cramer tonight to discuss these results, his strategy, and more at 6 p.m. Eastern.
All right, so the final name here is Ford, which topped third quarter estimates when it reported earnings yesterday, but it also guided on the low end of its previously announced full-year earnings forecast range. Phil LeBeau has the story on Ford. Phil.
Yeah, a rough day for Ford, Dom. When you take a look at shares down more than 8%, it's about the guidance. It changed in just 3 months. Back in July, they said, look, we expect to earn $10 to $12 billion this year. Yesterday, they said, well, it's going to be about $10 billion, which had more than a few analysts saying, wait a second, what happened to 10 to 12? Now it's 10? That's the primary reason why the stock is under pressure. There's also the issue of warranty costs. It has been an issue quarter after quarter after quarter. They believe that they're making progress here. They didn't detail it and, talk about it at great length yesterday, though it's still too high. And they've said it's too high. Finally, there's higher inventory, though that is an issue that Ford believes should move down, should be a little more normalized by the time you get into early 2025. Take a look at EV market share, because I get a lot of people saying, well, is Ford trading lower because they're not doing as well in EVs? They've actually cut their losses there. And the loss per vehicle is lower now than it was in the second quarter. Their market share, well, it was up there. I mean, their sales were up 12% in the third quarter. There you see they're a fourth year to date behind General Motors, Hyundai, Kia, and Tesla. And speaking of General Motors, I want to show you this chart. This is Ford versus GM over the last 2 years. Why are we showing you this? Historically, these guys trade pretty darn close to each other, almost exactly in tandem. Look at the split that we've seen, especially in the last 3 months, but over the last year, you really see that General Motors has outperformed while Ford has struggled.